I was really taken back by Scott Simon and his call for a 6% housing decline. He joins us right now. Scott, good noon to you.
Nice to be back.
Tell me about the present house price decline. Case-Shiller has it at -3 and change. Is that valid, or can we see further declines from here?
Well, we think we go down another 3 or 4% over the next 12 months, probably bottoming sometime next year. And we really haven't changed that view on where this would end in about 2 or 3 years. And 1 month doesn't change anything.
1 month doesn't change anything. You have a great institutional understanding of the agencies, of the blown up Fannie Freddie, and of the retail housing market as well. Do you advocate we need government policy here to pick it up, to step it up, to get it cleared quicker?
Well, the government can really help. These rental programs where people can buy houses and then rent them out. The Fed said they thought that there should be financing available to do that. That would help a lot. And it's very hard for people to get mortgages right now. Rates are the lowest they've ever been, essentially, to the homeowner, but they're only low if you can actually get one.
Yeah, we've heard that from Jonathan Miller and Robert Wettenhall as well. Folks, this is an amazing dreaded first chart. It's the real agony. I was thunderstruck when I put this series together. This is the existing home price adjusted for inflation and set in today's dollars. So in the lower right corner is 160-some thousand existing home. And if you adjust for inflation, you can see the boom and the collapse. And Scott, it's breathtaking how we've come back to the early 90s adjusted for inflation in today's dollars. You say, again, it will drive lower. What are you focused on in the quantity dynamics, in the price dynamics?
Well, there are about 6 million houses that are going to probably get added to the foreclosures. Those will need to change hands at some point. I mean, that's the biggest thing. There are also a couple million homes that are essentially vacant, looking to be sold. Bank of America, for example, has 1 million loans on their books that they need to get rid of non-performing type loans. There's a lot of things lurking out there under the surface that you don't see when you hit the MLS if you're one of your viewers.
Here's a V-shaped recovery. Let's look at it. It's a recovery in rents. This is the Lonsky chart. Thank you, John Lonsky over at Moody's, for showing it to me. And you can see the rollover in owning versus renting up to 2006, and you can see the explosion in rent prices relative to home prices. Scott, you write this up big. Tell me about the rental dynamic right now.
Right. In most of the country right now, housing, if you can get your mortgage, is incredibly cheap on an absolute basis, and it's incredibly cheap on a rental basis compared to renting. That's why so many people are looking to buy and actually rent out. It's much cheaper to own than rent in most parts of the country right now. And the only way that changes is if people actually buy those houses to live in them or buy them to rent them. And, it's a slow process. Over the last couple of years, you've driven people out of their homes into renting, about 2 million people. That drove up rents. And at some point, if you can bring those houses back onto the market as rental units, it actually puts downward pressure on rents a couple years forward, and it also puts a base under housing if you could get that to happen as well.
So how do we incentivize this to jumpstart it? Whether it's a Zingala's plan out of Chicago or it's Alan Meltzer 18 months ago or so, just saying let the investors come in. What is the Pimco strategy to clear this market? Is William Isaac cleared the savings and loan market 20 or 30 years ago?
Right. I kind of agree with the Fed. If you put a financing program in place, made financing available to investors, they would come in droves to buy single-family housing to rent it out. You could do what Fannie Mae is doing, which they're putting out 2,500 homes next month. There's sort of financing embedded in that. The problem is that Fannie and Freddie are such a lightning rod in Washington, it's very hard to use them in any positive way because you don't want your name associated with them if you're a politician.
Okay, and here again on the rent-to-own dynamic, the price theory of housing. Part of the microeconomics is supply and demand, as Carl Case talked about this morning. Supply and demand works differently in new homes versus existing homes. Mr. Case makes this clear, Scott. This is what matters. We need to get new home sales started. How do we do it?
Well, I actually don't agree with that. you build homes when you need homes. Part of the reason why new home sales have been so low and building has been so low over the 3 years was they made about 4 million extra houses over the prior decade, and now you're just sort of working through. This isn't supply and demand like in most things. If the price of Coca-Cola goes up too much, people stop buying it and it goes away. Houses sit around for, they're durable, they're ultimate durable. They live for 70 or 80 years. And so if you build too many of them, they don't go away, and that's really been the problem. So they haven't had to build any.
Around Scott Simon, Stanford University, it's better than good, but there's other places where it's, to be polite, weaker. Scott, location, it still matters, doesn't it?
Absolutely. One of the biggest things is where the foreclosures are. If you live somewhere there's a lot of forced sales, you're not very happy with your housing market. If you're in one of the places that didn't really go up a lot or down a lot, you haven't really noticed the boom or the bust.
Yeah, I mean, I'll go with that. It's a different story. Why can't we have a national housing policy? Is it because we're afraid the haves will take all the gains from clearing the market?
Well, it is a little bit like the euro. One policy certainly doesn't fit all. So you've got places like a lot of California, Nevada, Arizona, Florida, which have these huge foreclosure problems. You got places like Texas where it's not a problem at all. And if you start divvying up one big policy, you may indeed take from the rich and give to the poor, or actually take from the poor and give to the rich. Yeah,
I think this is a really big issue that needs a lot of discussion in Washington. I mentioned the great distortion, which is trade-weighted Swiss franc. Scott mentions Europe. Here's another distortion. It is a great distortion. It's existing to new home prices. Look how even they are through the 90s and into this decade. Scott, I would say this is an amazing chart showing the balloon in value of existing versus new homes. May I suggest that this is because sellers are reluctant to sell? When do they get less reluctant?
Well, if you own a house, you just can't believe how expensive it looks if you're going to go rent something else.
I agree.
You look at where you bought your house, and you don't want to sell. And by the way, that's part of the way the markets work. If the price gets too low, you hopefully don't have as much supply. The problem is, in this case, you have foreclosures which come out regardless of price, and it really annoys everybody who owns a house.
Yeah, but I think this is a huge issue. We focus on the foreclosures. There's a lot of other people that have actually paid their mortgages. Should they be somehow compensated, or do we just believe they'll be compensated with a future higher price?
Well, I mean, there's so much moral hazard in all of this.
Yes.
If you're looking across the street at the guy who got foreclosed on, he lived there for 2 years, he didn't put any money down. You put 20% down, you're now underwater, you pay your mortgage. How can you not be other than angry? I don't know what the answer is. It's a public policy, but if you're that guy, you should be really angry. Yeah, here we go on rentals versus owning and the anger that's out there. I like that idea of many moral hazards. The housing stock needs to be transformed to meet demand for rentals. This transformation involves converting some of the foreclosure inventory into single-family rentals. With your knowledge of the agencies, Scott, how easy is it to do that? Well, in a sense, it should be very easy for them. They have the things in place. They know all the homes. They know who lives there. The problem is Washington. Congress is very unwilling to do anything which uses Fannie or Freddie as a tool. They've lost $180 billion. You have to say you don't like them. You have to say you want to shut them down. But they are, along with Ginnie Mae, the only things that have kept the housing market alive over the last 5 years. What can either presidential candidate can do? What can President Obama or Governor Romney do to jumpstart the debate in Washington? Well, the debate goes on, and it's the most difficult thing, I think, from a debate point of view is people say, they ask me all the time, what is the correct government policy on housing? And there isn't a correct. It's a philosophical discussion. So I have a guy who works for me who says the government should be out of housing tomorrow. They shouldn't guarantee loans, but he's libertarian. He says they shouldn't be involved he shouldn't pay taxes, and there shouldn't be in the medicine or education.
Right.
And then there's the flip side, which is let's buy everybody a home. And the answer is somewhere in between, and it's really a public policy question. If they get it wrong, everybody in Washington will eventually get fired.
Yeah,
but that may take a while.
The flip side there describes Grosvenor-Larian arguing. Okay, here's a chart, one final chart, edging back to the new normal, the housing vacancy rate coming over. Scott Simon, what is your housing new normal?
Well, the homeownership rate got to 69%. It had been 64% for years. That's about an extra 5 million renters who became homeowners. We think that number will actually go back below the old 64%. It's harder to own a house. It's down about 66 now. So you may be turning another 4 million homeowners into renters over the next 5 years.
Very good. Scott Simon, thank you so much. Very informative with Pimco.